What's up, YouTube fam? Welcome back to the channel. I hope you guys had a great 3-day weekend. It was a long weekend. I was away, which is why I did not post any new content, but we're back and I'm excited about this one because we are officially approaching the best time of the year to sell options, or better yet, the best time of the quarter, right? Because earnings season, luckily it comes every quarter, right? But also when it does come, it's always a great time for us option sellers. So with that being said, let me show you guys what I'm talking about just so you have more of an understanding. Obviously, if you're a seasoned veteran at this, then you already know what's going on. But if you're someone who's new to selling options and you're trying to understand what I mean by why it's the best time right now to sell options, I'll show you guys. So obviously, option selling is not a game for people who, are short on capital, right? It's a game for people who have capital and want to make more. So with that being said, Netflix, which is of course even a little bit out of my pay grade in terms of my option sized account. I mean, look at the size of these premiums, and this is expiring this upcoming week. Now, obviously, yes, you need $80,000, but Netflix is a great company, right? This is why we love earnings season, because earnings season allows us to play only the best of the best companies and get insanely high premiums. Right? If you've been following this channel since the beginning, since November 6th when I started this journey, which it's been crazy, right? We're obviously on a round trip. You'll know that, we were doing great when it came to playing earnings on strong stocks. I've documented every trade. So obviously if you have free time, feel free to watch as many videos as you want to see what I'm talking about. But from the beginning, right, we were playing earnings on big companies, not Netflix because it was only a $20,000 start, but yes, you would need $80,000 to do it because of the price in stock right now. But the point I'm getting at, again, is the earnings for this weekend, or better yet, the premiums for this weekend are crazy because of the fact that there's earnings tomorrow. So if you take it today, then you can take advantage of this. But tomorrow, it'll already be deflated. So with all that being said, the next play we have, which also has earnings this week, right, is United, which is also tomorrow. Okay. And if we go and we look, obviously it's a lot cheaper than Netflix. You'd only need $10,000, but you could still make $400 in a week. So this is, the types of money that, maybe on premiums you're used to getting in a whole month, right? You're able to get in a week. Obviously, if you want to go lower, be safer, right? But the other reason why we love earnings is, again, because you're getting these premiums for stocks that you would usually get only for, speculation or speculative stocks. You're getting it on real good companies. So yes, there might be some volatility, but you don't necessarily mind being involved. So those are the only two. I'd probably play maybe American Airlines for this week, or one of these, American Express. Ultimately, though, next week is where it gets really, really interesting because you got Starbucks, you got Boeing, you got Tesla, you got Facebook, Apple. I mean, this is the time to sell puts on all of these stocks. Now, when it comes to earnings, I really don't recommend getting in too soon. Right, I'd probably recommend getting in 1 to 2 days before because the premiums will retain value up until the earnings report. So if you're getting in too soon, you're just gonna be kind of sitting around watching the premium even gain value, and so on. So yeah, these next 2 weeks are about as good as it'll get for an option seller because you can collect high premiums on great stocks, and it's just beautiful because you don't really have to worry as much since you're happy to be in the stock if you do get assigned. Now, with that said, you also have Google, AMD the week after, even like stocks like McDonald's or Spotify, like the premiums, PayPal, the premiums actually become enjoyable to play. These are just stocks that you really can't play or sell puts on unless you have just an absolutely large account. And even if you have that large of an account, you'll just always find other stocks to play when it's not earnings season that still offer good, risk and good reward. So with that being said, we'll talk about the plays that we did take. Obviously, we've been in this Connell play for like 2 months now. And I'll be honest, rolling it was a mistake in the sense of looking back, right? When I look back at it, if I didn't roll, this account would be at 23, 24K. We did take another play on Connell, but I just decided to take the profit because, we sold these puts for 250. Expiration isn't until February 21st. Here we are on January 21st. We're already up, over 100. To me, it's like wait a whole month for another 100 or just take the 100 now, right? So I just took the 100 now and we put it into TNA, which is it's a semiconductor ETX or ETF, sorry. So It's a 3x leverage, right? Obviously, as you guys could tell, I don't mind playing leverage. The leverage doesn't scare me. And truthfully, things like TNA, TQQQ, this is what you really want to be playing when you're talking about leverage, because it's still indexes. It's still safer than playing an individual stock, right? Like, let's see. Which stocks is TNA? Holding. So just so you guys can see what we're talking about with TNA, what's in it, right? Let's see, does it show which stocks are in it? I mean, regardless, it's an ETF, right? It's a 3x ETF. Let's see. It's relatively safe in the sense of, just comparing it to other things we've played, just comparing it to things that we've been involved in this channel. Truthfully, ETFs, are ultimately going to be the safest way, right? Like, I don't mind playing earnings. I like playing earnings. I think it's great for a lot of people, but it's still going to be a lot riskier than just playing things like TQQ, TNA, right? Obviously, ConL, a lot of people would say that's a crazy high risk play. Ultimately, Coinbase to me has always been like the #1 stock that I've wanted to be involved in as of recent times, just because, I'm already a large crypto investor, and I've always wanted to have more Coinbase exposure. Obviously, ConL is just more option selling friendly for my account size, and that's kind of why I decided to go with ConL, because Coinbase has just been on a run, and ultimately, by the time I funded this account with 20,000, Coinbase was already at 280, even 300 a share. So ultimately, yes, if it's a stock you truly believe in and you're not afraid to play, just hold forever, right? Roll down forever, right? It's the same thing with NVDL, TSLL, like Tesla, Nvidia, right? Because what it is with these 2x ETFs is the fact that the decay on them, right, won't always allow them to recover the same as the regular asset. But if you're rolling and if you're selling puts, then you can kind of offset that, because you can keep rolling lower, so your entry isn't going to be what it normally would, right? Like, with that being said, when I entered this ConL position, if you looked at it on the chart, it was all the way up here, where now my strike price would be 45. So instead of entering at 60, my entry would be 45, and ultimately, that would save me a lot of money and save me a lot of headache when it comes to the decay, because even if it didn't come all the way back to 60, just getting in at 45 and getting out at 55 would be a very profitable trade. So when it comes to selling options, I do believe you can play these ETFs, these 3x and 2x ETFs are very right and make a lot of money. But when it comes to buying and holding, I wouldn't recommend it. So hope you guys enjoyed this video. We have a lot of fun coming up for option sellers. I want everyone watching to take advantage of everything. I probably won't partake in as much earnings this season as normal, just because my hands are a little tied with some of these positions. I do, the TNA, since it's small, right, it's more of an experiment, because I want to slowly start getting out of ConL and ultimately start playing TNA, TQQQ, and putting most of my focus there. So, and then I'm going to the plan is going to be to slowly get back into individual stocks. So it's going to be like a back and forth type of thing. But, when reality sets in, I do believe that majority of your money as an option seller should be in these ETFs. I don't mean the leverage ones. I mean something like TNA, TQQQ, which, yes, those are leverage, but you know what I mean. Indexes, index ETFs, leveraged indexes are still safer than individual stocks, let alone leveraged individual stocks. So I hope you guys enjoyed this video. I hope you had a great weekend. I'll be back tomorrow for the next video, and make sure to like, make sure to comment and subscribe, and I'll see you guys in the next one. If you do decide to play United Airlines earnings or Netflix, definitely leave a comment below. I wish you the best of luck, and I'll see you in the next video.